Howdy, everybody. Welcome to Liberty Call for January 16th, 2025. Hope you're having a great day out there. U.S. stock futures are mixed today with the TSMC posting strong results and United Health missing the mark. Mortgage rates are back above 7%, squeezing home buyers and renters alike, while pension funds are jumping into Bitcoin as it flirts with $100,000 per coin. Meanwhile, the FSB is warning about market risks from climate shocks, and PNC Financial is riding high on better than expected earnings. Let's dive in and break it down. But before we do, I need to have some help from you. If you could give me some thumbs up, like, share, subscribe, follow, and press that notification bell. All right, let's get into the markets. Dow Jones finished the day down 0.17%, 73 points, closed at 43,148. S&P 500 down 0.21, 12 points, closed at 59.37. NASDAQ down 0.89%, 172 points, closed at 19,338. The VIX was up 1.18% today. It's at 1631. Canada up 0.23, Brazil down 1.09%, and Mexico down 0.58. In Europe, Germany was up 0.29, the UK up 1.09, France up 2.14%, the Netherlands up 1.53, Italy up 0.48, Switzerland up 1.29, and Portugal up 0.55. Russian exchanges both in the green today. The MOEX up 2.44, RTSI up 2.87. And the overnights, the Nikkei in Japan was up 0.32, Australia up 1.38, New Zealand up 0.56. In China, the Shanghai was up 0.28, Shenzhen Component up 0.41, China A50 down 0.21, DJ Shanghai up 0.22, Hang Seng up 1.23, and the Taiwan weighted up 2.27%. So pretty good day, I guess, across Asia and Europe. Not so much here. So, all right, well, let's hop into the market recap. U.S. stocks mostly lower as traders weigh softer retail sales and bank earnings. All right, U.S. stocks declined on Thursday as weak retail sales data dampened sentiment, offsetting strong earnings from the banking sector. Retail sales in December grew by 0.4%, below the anticipated 0.6% and down from November's revised 0.8% gain, signaling potential economic softness. Weekly unemployment claims rose to 217,000, exceeding expectations, further clouding the economic outlook. These reports followed Wednesday's market optimism driven by benign inflation data and a U.S. brokered ceasefire between Israel and Hamas, easing geopolitical tensions. The December CPI data showed cooling inflation, fueling expectations for Federal Reserve rate cuts. Markets now anticipate 2 rate cuts this year, down from the initial forecasted of 4. Federal Reserve Governor Christopher Waller highlighted that continued inflation moderation could lead to rate cuts in the first half of the year. Consequently, Treasury yields fell, with the 10-year yield dropping to 4.6%. In the banking sector, Morgan Stanley rose over 2% after strong Q4 profits driven by deal making. Bank of America, despite reporting profit growth from investment banking activities, fell more than 2%. On Wednesday, peers including JP Morgan Chase and Goldman Sachs posted record-breaking profits, bolstered by market recoveries and robust investment banking activity. The mixed economic signals combined with strong banking earnings indicate ongoing market uncertainty and hopes for monetary easing. All right, so it's kind of a mixed day. All right, let's get into the sales numbers here. December retail sales. This comes to us via First Trust and Mr. Nate Gurzy. All righty. Retail sales rose 0.4% in December, missing expectations, but upward revisions brought the adjusted figure to 0.6. While the increase was broad-based with 10 of 13 categories rising, inflation played a significant role as inflation-adjusted real inflation grew at just 1.1%. Auto sales led gains, rising 0.7% in December and up 8.4% over the year, marking the largest annual advance since 2021. However, building material sales dropped 2%, the largest decline since January. Core sales, excluding volatile categories like auto, building materials, and gas, increased by 0.5% in December and were revised higher for prior months. These core sales grew at a robust 5.6% annually, or annualized rate in Q4. Notably, restaurant and bar sales fell 0.3%, their first decline in 9 months, signaling potential caution in the services sector. On a year-on-year basis, retail sales grew 3.9%, but inflation-adjusted sales increased by only 1%, remaining below their early 2021 peak. This underscores inflation's impact as consumers pay higher prices for fewer goods. Despite 100 basis points in Federal Reserve rate cuts since September, inflation remains a major concern. Initial jobless claims rose 14,000 217,000 last week, while continuing claims fell by 18,000 to 1.859 million, indicating slower job growth in January. Meanwhile, the Philadelphia Fed Index surged to 44.3 in January, the highest since April of 21, signaling strength in regional manufacturing. Import and export prices rose by 0.1 and 0.3% respectively in December, with annual increases of 2.2 and 1.8%. All right. So it's kind of a mixed bag again. I mean, things aren't wonderful, but the wheels haven't come off the train yet. So give it a few more months. All right. Last article for today from Zero Hedge. The CBO lowers expected immigration, birth rate, and population growth. This was written by Mike Shedlock via mishtalk.com. He's an excellent follow on Twitter. So he's always got real good data. All right. The Congressional Budget Office projects that annual deaths in the U.S. will exceed births by 2033, marking a significant demographic shift. Between 2025 and 2032, population growth will rely on net births and immigration, but from 2033 onward, immigration will be the sole driver of population growth. The total U.S. population is expected to increase from 350 million this year to 372 million by 2025, with growth slowing to an average rate of 0.2%, far below the historical average. Fertility rates are projected to remain below the replacement rate of 2.1 births per woman. Rates among women under 30 are expected to decline sharply, while rates for women over 30 will rise modestly as childbearing is increasingly delayed. The total fertility rate is projected to stabilize at 1.6 births per woman by 2035. Immigration will play a critical role in population growth, but projections anticipate a decline in net immigration to an average of 1.1 million per year from 2027 to 2055. Policy changes, including those proposed by President Trump, could significantly impact these figures. The demographic shift poses challenges for programs like Social Security and Medicare, as the population age 65 and older grows faster than the working age population. Rising costs of childbearing and lower fertility rates underscore broader economic and social dynamics. Policymakers will need to balance immigration reform, labor force needs, and entitlement funding to address these demographic pressures. Well, I think a big part of it is, I'm probably the last generation to, I turned 18 in 1992 and joined the military because there wasn't money for college at the time. I could have worked, waited tables and done it, but I was ready for some adventure and, have some fun. So, so I joined the military, and then, that took me to where I am today. I met my wife at 21. We got married when I was a year later. I was 22. Year and a half after that, we had our first child together. She already had, we had Ryan, our oldest, already. He was 5 when I met her. So I walked into being a dad at 22 years old. So, my grandparents had kids. My dad was born when my grandparents were like 21, 22. My dad was like just turned 24. I was almost 24 when my son was born. So, and then my son, the younger one, he had a child at 23, 24. So we're the odd generation, unfortunately, where everything is, or groups or family where, we have kids like every 25 years. So, but, unfortunately, people are pushing that out because, cost of living is more expensive. They've got, $100,000 in college debt when they finish their bird call and basket weaving degree. And, they get out of the workforce in their mid to late 20s, and they're like, I don't have, money to date or buy a house or any of that stuff. So, things do need to change. My recommendation would be, don't spend all that money on college. Go and get some skills. There's plenty of ways to educate yourself through online coding, things like that. Go be an apprentice at a welding shop or a diesel mechanic. In your 20s, bounce around a little bit, learn a bunch of stuff so that you will have a bunch of marketable skills. So if one area dries up, you can go to another. So anyways, all right. So that's my soapbox about, and again, my parents' generation, the boomers, are all going to die off in the next, 20 years. And so, once they're gone, I think the big social safety net problem will pretty much disappear. But we have to figure that out right now. So, all right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So feel free to give me a call. I'd be happy to help you get back on track or take you to the bus station. All righty. Well, like I said, that's everything I had to cover. Hope everyone has a wonderful evening, and I'll talk to everyone again next time. Adios.